Welcome to Coverage and Clarity with Jacques, the podcast where we break down protection, planning, and peace of mind so you can make confident decisions for the people who matter most.
Welcome to Coverage and Clarity with Jacques. This is where we slow things down, remove the confusion, and focus on what truly matters, protecting the people you love with confidence and understanding. Now, today, I want to share with you tips young people need to know about life insurance. Now, understanding life insurance is crucial. I will cover essential tips that will empower you to make informed decisions about your financial security. From determining the right coverage to understanding the different types of policies, I've got you covered today. Now, what you want to do is start early so you pay less. Starting early will lock in lower premiums for you. Now, did you know that age is one of the biggest factors in insurers use to set their rates? So the earlier you start, the cheaper it is for you. Now, as a parent, you could have a policy for your child as early as 15 days old. Thereby, they'll have the best rates ever. And this is the best time to get it. If a person holds on to that original policy that they had as a child, they'll have that additional coverage on top of whatever else they get as life goes on. So now they're layering their policies and getting very good rates on it because they got it early. So what they want to do is get their own policies as early as possible so that as they get older, they'll have these policies combined to protect them and their family. Now, in the earlier years before you hit 30, consider term life insurance because this is a more affordable way to get substantial coverage for yourself. So as things get better in terms of finances, you could add the permanent policy. But at least with term, you know that it will cover things that you need. For instance, your student loans, they'll be covered. If you get married early, you'll have some money for you and your spouse around. So these are all the reasons why you want to start as early as possible. And by getting the term, you're able to do that at a price that you could afford for yourself. Now, once you're about 30 years old, you want to start looking to permanent coverage. So at that time, you want to start building cash value into your policies. Remember, the earlier you get it, the cheaper it is. Many people wait till they're much older, in which case insurance, as they say, is too expensive. It's not too expensive. It depends on when you purchase that policy. So you want to get it as early as possible. Now, as a new parent, you want to consider getting life insurance for yourself at that time, definitely, because you want to make sure that if you're no longer around, your spouse and your child will be covered in your absence. Too many people don't think about this until way later on. And then if a parent should pass, the other spouse will say, what could they do to take care of everything? They wish they had done this. Well, in life, we never have any guarantees, as you know. You always want to prepare for yourself as early as possible. By preparing to have insurance early, whether it be a term policy, as I mentioned, in your earlier years, or a permanent policy, the earlier you get it, the cheaper it will be for you. Now, for your children, you want to make sure that if you're no longer around, the education is covered for the next 18 to 21 years. Because the last thing you want to do is to know that you passed on and the child did not get the proper education that he or she needed because there was no money available. Now, this, of course, you have to remember, as you get additional children, the clock resets to when the youngest child is 18 to 21 years of age. This way, you're sure that you protected all your children that you have. Now, that brings up a good question that many people ask. How much coverage do they actually need? Well, what I would suggest to people is match your policy to your needs, like covering your mortgage or years until your child reaches of age of majority. What happens is if you buy enough coverage now, you want to make sure that in the event that you're no longer around, you replace your income. Now, the average people usually replace their income is 10 to 15 times their annual salary. That'll give your spouse a buffer to take care of what needs to be taken care of until they get back on their feet in the event of losing you. As well as the family and the children, they want to make sure that they have coverage to take care of the stuff that they need. School, a house over their head, a roof over their head, and being there to have the lifestyle that you would want them to have. Now, to do all that, you want to factor in any debts and final expenses that you have when determining your amount. Now, the debts could be anything from the mortgages, any loans that you have outstanding, and then, of course, if anything should happen, any medical expenses that you may have. So these are all things that you should factor in when getting the number of how much your policy should be. Now, many people think that the number should just be whatever they think it should be, but it should always factor into something specific. Are you covering your mortgage at this particular point? Are you making sure you're leaving enough for your family in the event of your absence, etc.? So these are all things to look at. Now, if you're single, you can still get life insurance because remember, when you're single, anybody could pass at any age. So even if you do pass, you want to make sure your funeral costs are taken care of. You may want to leave a legacy or even a charitable gift. So these are all reasons to get insurance as young as possible. You don't need to be older to get it because the younger you are, the better it is. One thing that people need to also factor in is inflation. Now, when choosing your coverage, you may say, okay, today may be, let's say, $10,000 for a funeral, but you're expected to live a long time, which is what everyone wants. So in that case, you want to factor in inflation. So a $10,000 funeral today may be $30,000 in 30 years, as an example. So this is why you always want to factor that in getting your coverage. So as time goes on, you could always add more coverage to what you currently have to compensate for that, but at least make it realistic from the beginning. And one thing that I show people is how to ladder their term policies, meaning that you put one policy over another. The initial policy may be, like you said, to take care of your student loans. Once you have a house, you want to make sure that you cover the mortgage for at least the 30 years. If you're married, you want to make sure that you leave money for the spouse. If you have children, you want to make sure that there's money there for each of them up until the age 18 to 21. So as you can see, you can ladder your term policies, and by having the term policies is much less expensive. But this way, at least you know that no matter what happens, you're covered for all circumstances. Now, later on, when you're able to get more coverage, you can get to your permanent policies where you can now start to build cash value. Now, with the cash value, it'll give you much more opportunities in the future. If you want to borrow against it, if you want to take out from it, etc. So these are all the reasons why I always say start with a term policy in your younger years when it's more affordable to you, move on to your permanent policies, and then layer them as you go on to make sure everything's taken care of. Now, if you find the advice I've given so far helpful and would like to inquire more about coverage, please call the studio at 631 594 8118. Once again, 631 594 8118. Now, you may ask, what factors could affect your policies? Well, here's just a few to name. Hazardous occupations or hobbies. Now, you want to disclose hazardous occupations or hobbies so you get an accurate premium and avoid claim disputes. Now, what does that mean? Trying to hide these facts could affect you in the long run. For example, if you bungee jump or skydive, let's say you did it regularly as an example, and you didn't make it known, if you should pass within the first 2 years of your policies, this gives the carrier reasons to reevaluate the claim before paying it out. So if you do that, let them know about it because therefore your rates will be comparable to what your risk activities are. Because remember, life insurance pays out on a risk. The riskier you are, the more expensive it is because that's more reason for them to pay out. At the same time, when they do pay out, at least your family will have the funds that's necessary to take care of everything in your absence. Now, tobacco and vaping. Your history of tobacco products and vaping can significantly raise your premiums. Now, this includes all the different types: chewing tobacco, cigarettes, cigars, and vaping. Now, some people think that one or another of these are not as dangerous. They're all bad for you in one way or another. Chewing tobacco could affect the inside of your mouth. Cigars, cigarettes definitely affects your lungs. And vaping, as research has now shown, is even worse than cigarettes and cigars by using those. So what you want to do is make sure that you don't do that. But if you do use it and you do stop for a period of time, some carriers will even reconsider giving you non-smoker rates at a later date. This will significantly save you on your premiums in the long run. Now, having group life insurance, you want to make sure that you at least have this on your job if it's being offered to you. Because I always tell people, if you have it, consider it as extra coverage. Don't rely on it as your only source of coverage. Reason being, if you should ever leave your job for whatever reason, you no longer have that coverage for yourself. So if you have it while you're on the job and you have your own personal policies, now you have additional coverage. So every little bit helps in that event. Now, I want people to recognize that your group life insurance ends when your job ends. So if you leave your job, you're going to lose that coverage. Always have your own personal policies because it's now portable. Portable meaning that you control it. No one could ever take it away from you, say that you no longer have it. As long as you maintain your premiums, you will always have that policies. So therefore, have a personal and portable policy for yourself and your family, and then take the group coverage that you have on the job while you're there. Because what's on the job will only pay if you should pass while you're working. And I hope that you're around much longer than that. Now, understanding the different types of coverage from your permanent and your term policies. So on your permanent policies, they build cash value. Now, with the cash value, you could borrow against it or withdraw under certain conditions. So these are all reasons why I always advise people have a permanent policies. But if you do take out from your cash value, be cautious when you're borrowing because loan values will reduce the death benefit and you may have tax implications. Now, the reason why I'll reduce the death benefit is because it's always the face amount less outstanding loans equals the death benefit that's paid out. So if you do take out from your policies, repay that so that your beneficiaries will get the full death benefit that you intended for them. Now, with term, that could be used for income replacement. So, as I mentioned earlier, if you have a mortgage for 30 years, that will replace the income that you will be paying for that. If you're no longer around, that would help the spouse and the children cover the time period that you're no longer around. So these are the reasons why people usually get the term insurance, is to make sure that in the event they're not around, their income could be replaced by the spouse and the children. Now, with your permanent coverage, that's used for bigger things such as estate planning or business needs. So these are your more long-term coverages that are there. Now, if you own a business, consider a buy-sell or key person insurance to help protect your operations. Now, for those of you who do not know, a buy-sell agreement, the way it works is if you and a partner have a business together and one of you should pass, the insurance that's paid off at the time of death will cover the other partner. Therefore, they can continue the business as planned. Because if not, what happens to your share? Normally, they will have to take on one of your family members for that, which they may or may not want to do. So with a buy-sell, you definitely know that money's passed on so that the business could continue as it was originally planned. And with a key person insurance, what that does, it will find a person that's necessary to help the business run. So the key person is the most important person in the business, usually the owner or a particular employee that manages something that's very important to the company. So by having key person insurance, what that will do is make sure that they're able to get somebody else to replace that person to maintain the operations of the business. So that's why it's always important to have a buy, sell, and key person insurance if you're a business owner. What you want to do also is consult a tax professional for complex situations like estate planning or corporate owned policies. Because with that, your tax professional will look at all the implications of what needs to be done, how they need to protect you, and the long-term effects, especially when it comes to taxes. Now remember, your debts don't die when you die. If you have student loans, check whether your co-signer will be protected by your policy in case of your death. Because what happens is if you pass away, your co-signer is still responsible for your loan. Remember, by co-signing, you're taking responsibility as if you're the one who signed for it yourself as well. So you want to make sure that with your life insurance policy, it covers your student loans to take the debt off your co-signer. Now remember, life insurance is used as a broader financial plan, coordinated with emergency savings, retirement, and debt management. These are stuff that I mention all the time that people need to do because emergency savings is money that you know that you have there in the event something should happen. What I would say, have a minimum of 6 months emergency savings there. Your retirement. If you don't have your own retirement through your job, try to put some money aside into an annuity or other vehicle to support money at the time of retirement so that you're not dependent just on Social Security. And debt management, as you know, maintaining that debt. Any debt that you have, pay it off as soon as possible. And if you need to pay it in over a long period of time, pay it off little by little. But make sure that you're taking care of that, because these are all factors that you want to do, is to prevent any debt being left to your family upon your passing. One thing that I always tell people, name your beneficiaries wisely. You want to have both a primary and a contingent beneficiary to avoid probate complications. Now, your primary beneficiary is the person that you choose to take care of everything upon your passing. The contingent beneficiary comes in place if your primary beneficiary should pass you before you go on. So by doing that, you know that it's not left in their estate and in limbo, but that someone else will take care of everything that you left. You want to educate your beneficiaries about the policy, how to file a claim when the time comes. So this is one thing that I always show my clients. Have the forms there so that they have all the information, what policies you have, what bank accounts you have, who your beneficiaries are, so that they could take care of your estate for you. Now, you want to keep your beneficiaries' designations up to date after major life events such as marriage, birth of a child, or even a divorce, because you want to make sure that the person that you left the money to is who you want to go to. After a divorce, which a lot of people sometimes forget to change beneficiaries, it'll now go to your ex-spouse, which a lot of times you do not want to have happen, except if you had maybe children with them and you want to make sure the children are protected. But in a case like that, you can leave money directly to the children or to the trust that takes care of the children if they are minors. So always make sure you update the beneficiaries that you have on your life insurance policies. Now, what I personally like to do as a life insurance agent is to review with my clients periodically. Every year, I want to go over their policies with them. Reason being, things that may affect them next year may not have affected them this year, and vice versa. You always want to make sure that everything that you have is up to date. Now, when you're reviewing your policies, remember there are two main types of policies: your temporary policies and your permanent policies. So your temporary policies, such as term, will cover you for a period of time, 10, 15, 20, 30 years, which is why it's called a term, the time period that's there. Your whole life policies last you your whole entire life. So this is why you want to make sure you have whole life policies in your portfolio, as well as the term policies to cover the gaps that may exist within there. Now, reevaluate the coverage if you get married, divorced, have children, or change careers. At all these points of your life, reevaluating how much insurance you have and how much insurance you need is very important. So you always want to make sure that your policies still fit your needs. Keep a copy of your policy in a place where your beneficiaries could find this. This is why as I explained in my previous podcast, I mentioned my family data guide and a last will and testament that I provide to all my clients. Now, with these items, your families will know exactly where everything is located, what you want to have happen, and how to get to the funds that's necessary. Now, I hope you found today's topic very valuable for you and your family. Now, here's what I want you to remember. Life insurance isn't about fear. It's about foresight. It's about making thoughtful decisions today that will bring you peace of mind tomorrow. That's what we focus on here at Courage and Clarity with Jacques. Education, understanding, and protection you can trust. Now, if you found value in this message, please share with someone you care about. And if you're unsure whether your current coverage is up to date, call me so that I could help you out with that, because I want to be there with you every step of the way. Now, remember, I provide coverage to clients nationwide. So to contact me, please call or text the studio line at 631-594-8118. That's 631-594-8118. Now, this is Coverage and Clarity with Jacques, where protection meets understanding. Until next time.